Last week, the big banks kicked off earnings season with some solid quarters that didn't really seem to resonate with Wall Street. What about the smaller regional banks? On Friday morning, we heard from First Horizon National. That's FHN, Tennessee-based regional, 170 locations throughout the South. How'd they do? Well, the company delivered a 2-cent earnings beat off a 30-cent basis. I mean, some people felt that the revenues were slightly weaker. At the same time, First Horizon's net interest income, what they make on the difference between the interest they pay on your deposits and the interest you pay them on your loans, well, increased over by 13%. Commercial loans up 11%. Deposits plus 9%. Better than a sharp stick in the eye. Now, First Horizon stock has been in a holding pattern for most of the year, but that's because it roared up 40% in 2016. And the company is in the middle of making a major acquisition, the $2.2 billion purchase of Capital Bank, which is expected to close this quarter. So could this stock be ready to get its groove back? Let's check in with Brian Jordan, the chairman and CEO of First Horizon National, learn more about the quarter and where his company's headed. Mr. Jordan, welcome back to Mad Money.
Good evening, Jim. Thanks for having me back.
All right, Brian, I've got to tell you, I went over your numbers, and I'm thinking this is really the kind of thing we used to get from bank stocks. Slow and steady, actually, with a little bit of double-digit growth in loans. The possibility, I think, down the line, I know it's up to the board, the dividends going up, buyback, and yet people still seem to think that the banks are not as investable and opportunity as they were before the Great Recession. Aren't we now doing better than we were before the Great Recession?
Yes, I agree. I think the economy is continued to move along, and you'd expect the banking industry to move in tandem, maybe 2 or 3% better than you get in terms of economic growth. In terms of investability, I think the industry is significantly more investable with the safety precautions that have been put in place as a result of Dodd-Frank and regulatory reform following the recession or the financial crisis. So I think the industry is doing about like it should on the whole, tracking the economy maybe a little bit more, and is significantly more stable than it was, say, 10, 12 years ago.
Okay, let's talk about job growth. We get these numbers, and there'll be some people who say, I don't know where that job growth is. And then I look at Tennessee. You've got unique job growth. Where are those jobs being created?
Well, you're right. Tennessee is an extraordinarily balanced economy, and it's doing very, very well in this recovery. West Tennessee tends to be influenced by distribution. FedEx is obviously hubbed here in Memphis. Middle Tennessee has a big healthcare presence and a dynamic economy centered around Nashville. And then on the east, you have the resurgence of the manufacturing economy here in the U.S. taking hold anywhere from Johnson City to Chattanooga. So you're seeing pretty steady growth across the entire state. And our workforce is stable. And in Tennessee, you have a favorable labor and tax regulatory environment. So we think it's going to be at or above national trends for the foreseeable future.
All right, now let's go over what the new regime looks like. Now, we've got the Federal Reserve taking up rates. Looks like we're going to have a December rate hike. Good for you. We also have greater clarity with Mr. Quarles versus, say, Mr. Tarullo about how banks can assess themselves ahead of these tests that the government does. Does this make you feel more optimistic as a banker?
Yes, I am. Two things. One, as you and I have talked in the past, regulatory reform has been important for the industry, and you're starting to see that with the leadership changes at the Fed and the OCC. You're starting to see the pendulum swing back more to the middle. And, you know, maybe we get some legislative change that comes out of amendment to Dodd-Frank, but I don't think that's as necessary today with the regulatory reform coming from the OCC, the Fed, the FDIC, and state regulatory agencies. So all in all, I think it's more balanced, and I think that does make it an easier environment to serve your customers, serve your communities. Essentially, a bank like ours is a community-facing organization. It's a community bank with a larger balance sheet. And this environment with this regulatory shift is going to be very positive for us, and so I'm very encouraged by it.
Now, you're making this big acquisition. There's a moment in the conference call where you actually talk about how that you're not yet necessarily ready yet to have big investments in artificial intelligence and labor-reducing technologies, but I would think once you complete this acquisition, it might be time to bring that in and really save a lot of money for your shareholders.
Yes, clearly the technology changes facing our industry are significant. They're going to require significant investments over the foreseeable future. doing acquisitions like this, mergers like this with Capital Bank, give us additional scale to make those investments. The artificial intelligence technologies are evolving and evolving at rapid rates. And as you suggested, we will invest in them at the appropriate time. In the call, as you pointed out, when I addressed it, I also said that relationships with our customers, the personal relationships, one-on-one, person-to-person, is what makes us unique. As I said a few minutes ago, referring to community banking, it's about those relationships. So we're not in a hurry to cut those personal relationships, but we will invest in those technologies when it suits the way customers want to do business with us.
Well, I'm glad to hear you say that, because obviously a regional bank is much more in touch than if it's a national bank flying into Tennessee. And what you do want is that high touch, not the low. Thank you so much to Brian Jordan. He's the president and CEO of First Horizon FHN. Long a recommendation of ours, and I'm sticking with it. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.